Check, check. Check, check. What's up, everybody? Welcome in. Good to have you all. What's up, man? Good to see you. Good to see the regulars in here. Hopefully we got some fresh names in here too. Should be a good one for everybody. Michael, good to have you. Peter, new here. Glad to have you. Welcome to the best Discord ever, man. You put the time and effort in, man. It's going to pay off for you. Promise. Let's give it a few minutes. Let people roll in. Check, check. All right. Pulled my headset out, so hopefully everyone can still hear me. Give it just a couple more minutes. 30 to 40 people is usually what we get for lectures. So let everybody roll in, then we'll all get going. Actually, I guess a blank screen is not what we want. Let's have that. Rena, good to see you. Glad to have you here each week. Tired of blowing accounts, education first from now on. Yep. Yep. We will talk about that, and we'll go over some training psychology at the end if we got some time. People that were here last month with this, a few slides will be the same, but charts will be different. Some of the names I switched up a little bit. Some motivations a little different. Might even give you guys some homework at the end, see if anybody wants to do that. Yeah, we focus on education here first and foremost, obviously. When people kind of just take a breather and look at the charts and just trade price action and not, the best indicator they've seen on YouTube, trading is, fairly easy. It's just the mental game. But yeah. All right, guys, we got 44 people. We got the regulars, we got some new faces. This might be all we get for tonight, so that's all right. But other applications, trading, think another platform. People don't use Thinkorswim, Peter. Most people will use Robinhood or Webull. Both have their pros and cons. Thinkorswim is definitely industry standard, the best of the best. But yeah, it's probably if it's anything like Webull, it's the questions, or if they did like some questions, that's probably why they didn't clear you. But send me a DM or anyone else, and we can get you set up. But let's get started, guys. Just want to say welcome to all the new members that maybe may not know me. Discord name is Startedwith1k. Obviously, 3 years ago, hinting the name, that's what I started with. That's kind of what I have a passion for since I've been a support member, is trying to help those who maybe are new to trading, or maybe they've been not trading a while and they keep blowing up portfolios, and maybe you start at 20K and you're down to 1,000 or 500, or maybe you start with 10,000, you're down, you just keep blowing it. I'm gonna do these lectures about once a month because I think it's important to kind of get people. It's a good reset button. It gets people in check a little bit. Some of what I show you is gonna be obvious, and some of the names I show you may look like they're not gonna pay, but I can promise you some of these names I show you every single day, at least one, if not a few, will pay, and they'll be easy to manage. And every 5-minute candle is not going to kill you, and it's not going to stress you out. But like I said, the goal is I just kind of want to have that light bulb moment where something kind of goes off in your guys' head and says, you know what, I can do this. I'm struggling, with Tesla or whatever it is, or SPX. I think I can trade it, have a couple good days, and then I have a bad day and it wipes out 3 days of gains or stuff like that. But yeah, so I'm not going to be charting those big tech names. You have to say that for someone else this week. So hopefully you're not disappointed with this lecture. But yeah. So portfolio size. Obviously, it's called building a small portfolio. I said this last month, and I'll say it again. It doesn't mean that I think $1,000 is insignificant. It is just relevance to big tech and what is mostly called out in the Discord, which is fine. We have a lot of really, really good traders. But people with, kind of portfolio size around this size, like, if you've seen alert for Tesla and it's half or all of this position, maybe not 1,000, but if it's, $200-300, yeah, maybe the only alert you see that day, but it doesn't mean you should take it. Like, you guys, you may hit on it and feel really good. You make 75, $80 and you feel like you're on top of the world. And the next one you take and you're down to, you take a $200 loss on it and you're like, where do I go from here? And so, I say small portfolio or building a small portfolio doesn't mean whatever he has is insignificant. It kind of just is just relevance to that. But I'm privately DM people, and some people have $200, $400, 1,000, 1,500, 1,200, whatever it is. And so this is kind of geared towards you guys, and kind of want to show you guys how it's possible to actually build this portfolio. Realistic daily goals and end of the year goals. Again, this slide is a little bit of a repeat. We'll get into some new stuff. So, two most important things when you build, especially a smart portfolio, but it could be any size for that matter, is you want to focus on the percent gain. So, if you put in $500 in the S&P 500, on average, at the end of the year, you're going to get 12 to 16%, 12 to 16% on your investment. And so think of everything as an investment, your entry. And so some of these names that I'm going to show you tonight, they're cheap. They're $30, they're $50, they're 40. And so look at things like this. You may look at it and you may have a $500 portfolio and you say, you know what, this is only $8. I'm not going to sell it. But you need to think again in percent, because whether you have one contract or you have 10 of these for a $300 entry, a 25% return is amazing. When the market gives you 25% during the day, you need to take that every single time. Obviously, play the charts, but to go up 25% and let that go back down to 0% or a loss it's just not good trading. And so really on these smaller names, don't look at the dollar amount, look at the percent, play the chart in front of you and play what it gives you. But like I said, these 15, 30% winners, you keep stacking these, and 2 to 3 of these a day. You know, we didn't trade yesterday, obviously, with the holiday, but you stack 2 or 3 of those a day, and you're gonna look at your portfolio on Friday and be like, wow, this works, this really works. I'm able to get trades with 3 days time, a week time, 10 days. And like I said, every candle is not killing me. I can manage the position. And it's just a lot less stress. And like I said, I still play these names I'm going to give you every single week. Take a screenshot, write these down, take a drink of water. But these, thanks to Rena, she kind of got me on playing the bank sector a little bit more. But BAC, CCL, cruise lines, airlines, DraftKings, sports betting, mining and metals, KO's Coke, PayPal, we know PayPal, Rivian, EV company, Starbucks, everybody loves coffee, AT&T, Walmart, XLE is the energy sector, XLF is the financial and bank sector. So, like I said, I kind of picked a variety, and the reason I picked a variety is because, if I think XLE was down pretty bad today, or wasn't fine for any buyers. And if you look at some other names in the market or some other names, like, this may be bearish and this could be bullish. So like, this is a wide variety I give you guys to play. And like I said, every day, one of these is going to be moving. And so basically you just start your pre-market morning, you set a high alert, you set a low alert, and I just wait for one to trigger. That's literally all I do. And so one of these will always be moving, like I said, you guys, but this is getting recorded. So, if you can't remember to write these down or whatever, but just kind of remember some of these here. And like I said, the reason I like these, I can buy a contract of most of these, all of these for easily less than $100. And some of these I can get 2 to 3 weeks time. Okay, so what does that mean? So it means, obviously I'm not going to hold till expiration. So if I get not this coming Friday, but a next Friday contract, I'm not going to hold it until expiration, but I have 10 days till expiration to be right. So if I'm in a bullish position, versus a SPY 0 DTE, though you need to be right within a few minutes. A 0 DTE, like after 15 minutes of chop, your contract will not be worth the same. 15 minutes of chop on some of these with 10 days time, you're still doing fine. So these are very, I don't want to keep saying easy, but they're easier to manage. They're not going to be stressful for you. Like I said, every 5-minute candle, you can play the chart in front of you a lot easier. So again, focus here is buying cheap. And if you're in calls and dips a little bit, they're easy to manage. So what would CCJ also be an option? Is that uranium? I'll get back to that one. JDub, Walmart has a 3-to-1 split on 226, which could make moves. Yes, and it just had earnings today. Yeah, the 3-to-1 split. It's usually it's a push up into the event, JDub, and it could be a sell the news. I'm not saying be bearish this week on it or whenever 226 is, but yeah, just watch for a push up. It's been holding some good levels. I've been kind of trading that one just a little bit recently, but yeah, just watch for a possible sell the news event. Not saying it's going to be, but just be wary. All right, let's take a look at a couple of these. What I'm going to show you guys, everything on the left is the option price chart. So if I'm in calls, the price of the option contract as I'm in it will move up. And this is the stock chart. So this has been my moneymaker pretty much all of this year or all of 2024. There's a really big level. There's a green zone. We can check this out a little bit later. This is just a zoomed in. That's on the 5-minute time frame. Carnival Cruise Lines cruises. This 1485 to 1493, we'll call it 16 pocket, has been huge over and over and over and over and bounces. And so you may see this pre-market zone here and you may see this sell down and say, wow, bearish, bearish, bearish. Number one, when you buy these cheap names, you need to look at the move. This move 1504. This is like a 20-cent move that we're talking about. 20 cents or 10-cent move. So this may look like a big move on the chart, but it's 10 cents in the stock. And one thing to note, it's coming in to a huge support here. So last week, again, I set alerts in this lower pocket here for when these trigger. So yes, we're selling down, but we sold down into an opening range low into support. I'm going to take this every single time until it pays me. So let's take a deep dive into this. This green line I lined up, it lines up all the way across. And so when the price of Carnival Cruise Line comes down, I'm looking at the 15 call. And so one thing to notice here on these cheap contracts, because they are so cheap at $29 a contract, I can buy at the money or in the money. When the price is trading at 15, you don't buy a 16, a 17, 17 and a half contract, because this move you see is a nice move, but look at 15 to 15, it's a 24-cent move. But if you buy a 15 call, once this goes in the money, you have intrinsic value in your favor. And so these are the moves you need to be looking at. And the two most important things is, open interest and volume and your strike price. The strike price has to make sense. Again, I'm at the 15 level here. I'm not buying an 18 call, $3 out of the money because it costs me $3. No, I'm buying something at the money. So when it pushes, I'm instantly in the money and I get this move here, And so again, looking at this low zone here. So this is the value of the 15 call as we come into this support here. So we sell down, it's 29 bucks, it's 30 bucks. And so this low here, 27, is this zone here. And so when you guys use the options chart next to your trading chart, you can hold through all this chop. The 9 EMAs, this purple line, and the blue is VWAP. If this was a SPY 0 DTE call, you cannot hold through an hour of chop. When it pushes up, your value of your SPY contract will not be the same. But this, you can sit through this, 29 bucks, $29 entry, and we break below this, look at that risk. I'm risking, if you want to stop at the low, I'm risking $2. $2 is my stop loss, or could be a stop loss. My stop loss would be below this zone, but the point I'm trying to make is on a cheap call like this, 29 bucks. The high right here, let's look at the high of day that it pushed, this 1524, 29 entry up to 44 bucks. That's a good chunk of change. And you say, okay, it's only 14 bucks, 15 bucks, whatever that is. Okay, you have a bigger port, buy a few of these, buy a lot of these, you got a bigger port, buy 10 of these. And this is where you hear people that are successful, they say, I'm trimming. You can push and get this halfway point up here. Say you want to sell at 40, this pocket up here. You get 10 of them, that's fine. Sell 8 and hold 2. See if we break out, see if we push these levels. But these type of plays are the stuff that builds portfolios. You have a $500 port, buy 1 or 2 of these. Your total entry is $60. It's 30 bucks to get in, 60 bucks. And you play the chart. You have a couple of these per day, and this will greatly, by the end of the week, you're going to be like, wow, this is, I'm not going to say it's easy, but this is where the magic is, you guys. And so, it's fun to play Tesla. It's fun until it's not. It's fun to play SPX until it's not. You get a big winner. I'm going to show an example of a SPY and SPX today that just probably wrecked people without stop losses. Michael has a question. It says, would that 0.2 move be like 15% gain if you're in the 15 calls? I'm not good at math, but someone can do the math who's smart here. But 30 to 45, what does that gain, you guys? Like that's a pretty damn good move. If anybody wants to jump on the chat, that's got some brains, but I don't have that brain power right now. So does this kind of make sense, everyone? Again, the strike price, look at that, 50%. So again, J-Dub pointed out 50%. So again, don't look at the money, look at the percent gain and say, I just made 50% on a trade. If this was Tesla and you made 50%, would you be selling? Obviously, the answer is yes. If this was Tesla calls and you're up 50%, of course you're selling. And so this is no different, you guys. These are just cheaper contracts that people say are slow and they're stupid and they don't pay. That's a 50% trade if his math is correct. Like, this is where the money's made, you guys. Like, Again, it's fun to play those other names if you're experienced, but people new to trading, people that can't handle the stress of, every single candle, what's going to happen. Like this chop here, this is nothing. This is a $2 chop, 29 to 31, 29 to 31, 20. I can hold plus $2 break in, plus $2 break in, break out, sell that. All right, everyone following along? I got a couple more examples just to sell my point. FCX, this is another one. I kind of mentioned a few people. Broke some key supports here. This is a 4-hour chart. I want to start zoomed out to kind of show you what I'm talking about. I colored this big support line down here purple just to kind of sell my point. But I made a comment, might have been on Trade 4 on this 37 zone, 37.50 was pretty big. It broke, and when it broke down, it broke hard. And so let's focus on this 37 as just another example. Kermit, so would that mean my contracts would bounce between 3% range on that chop? Yeah, probably. If that math is right, yeah, that would be, probably a few percent range. But again, when these slower movers are doing this, you can say to yourself, and the point I want to sell here is, I have 3 days of time, or maybe I have 10 days of time. I can hold through this because it did not break my support. This is a support. If we have time, I'll show you on the charts here. This bounced several times in the past in January. And so you can say, look at, yes, it's going up and down, it's chopping, but it did not, bulls are not winning, but guess what? Bears are not winning either. And so you can hold through this. And this is where you play the chart. When people are in SPY and SPX 0DTs, they look at this and they freak out. They go, oh, profits. Shit, it took it all. Took it all. Oh, profits again. It took it all. Took it. And you freak out. You look at your percent, you look at the dollar, and you do not play the chart. And then you panic sell down here, and then the move happens. You go, dang it, why did I sell? I got paper hands or whatever. It's because one of two things. You're nervous probably because you're in too heavy, or you're just nervous because you don't trust the chart that's in front of you. But with these movers like this, like I said, you can chill. And look, this was a play that I had. You can see my alerts down here. I bought this and I let it roll. I said, if an alert goes off down here, it probably means my setup is invalid. All right, back to FCX, 4-hour chart here. Let's focus on this purple zone here. This was last week. We had a pretty big sell. Bears took over. Let's focus on this purple line here, zoomed in. 36.5 call. Again, why 36.5? Why 36.5? Let's look at where we're at. We're at 36.42 on this purple zone. Again, I am not buying a 39 strike. I'm not buying a 40 strike. I'm not buying way out of the money here because I want this move to happen. And I want to happen, I can day trade. I did not swing this, but I'm showing you the possibilities of a swing. Obviously, in hindsight, I could say, oh, look at what it does. Everybody can do that. But my point is, you sell down on what looks like an ugly chart, but you zoom out to the 4-hour, the daily, the 1 hour, and you find these key levels. Again, I seen this level here. I think this was Monday of last week, possibly, and this was Tuesday, I think. So this was a trade idea. I did not actually take this one, but I think I've mentioned this to a few people. I said, look under the support here. We sold down, we bounced. Buyers bought it back. We sold down, we bounced. We opened pre-market over it. We have this little trend here. So again, focus on this zone here. This is now, again, a three-day TE, short date entry. Again, entry $55. Obviously, it's shoulda, coulda, woulda moment, but if you swung multiple days, a $55 contract into 270, like who doesn't want that? Whatever that percent gain is. Again, I don't swing much, hardly ever. If I got this entry, I would probably be selling up here, somewhere into this 94 zone, 100 zone up here. Again, liquidity matters, open interest and volume on the contract matters, you guys. But again, I just want to sell the point here of you can buy, I thought I had another example of this, but I don't. Oh, here it is. Yeah, 10 days till expiration. So say you want to buy more time and say you're like, you know what? He called this support here. I like it. It's holding. I'm going to swing. We pushed up. I like this close. $65 entry here, down here on a next week. So you have 10 days time, $65. And again, you can move this alert down here to 36.42. So say you enter down here, 36.42. You could say, you know what, I'm wrong, or we tag down here, I'm in the red. I want to watch and see if we hold today. So you have 10 days to figure it out. It's not a same day, stuff like that. But again, 65 bucks. If you held through all this, great. But these are the moves you want to make. These are the things that are important, you guys. Starbucks, another one. Risky 0 DTE. This was a big one. This is an example of, setting levels. There's several people in the Discord that like to play this one. This is risky. It expires the same day. But if you notice that we sold down in the 93 zone, this 93 was huge support. We sell down a buy up. If you buy somewhere in this candle, this is a 15-minute candle, so this is a 15-minute chart here. If you buy somewhere in here, that's 32 bucks inside this candle. If you said, hey, we sold under support, a big buy up, this 15-minute engulfed this whole zone here. So we sell down, and this candle here engulfed and bought back all this. That is a bullish candle right there, buying back over support. If you bought that and you said, hey, buyers are still here over 93, we'll call it $30 entry. 30 to 107. I did not hold through this whole thing. I sold into this zone, but 30 bucks, I took a 0 TT because I'm comfortable with, I guess, trading in my levels. But these move, you guys. And again, look at what I bought. 93 strike. Why? We are right at 93. I'm not buying a 94. 94 could pay on a 0 DTE because of this move, but I didn't know I was going to get this move. So if we move up here and we kind of chop a little bit, a 94 on a 0 DTE is going to chop you up a little bit. It's going to decay. But obviously we got a big move here. It paid nice, but yeah, you want to buy at the money, because when we push up to this level here, I'm already in the money. 93.14, I got the 93 call. Okay, and so I have that intrinsic value working for me here. This makes sense, everybody? Is everybody bored? I know it's a lot of examples, but I just want to sell the point here. Starbucks, same thing. Again, if you didn't like the 0 DT price action or the risk, you can buy a 93 strike on this. Ignore that. I don't mean 83, I mean 93. But again, buy down here, you can get the next week contract 93, and look at this move, nice move here. And so all right, this is dumb, it's boring, this pays little. You want to play SPX, I get it, everybody does. There's a gains tab, everybody wants to flex 300% gains. This is today. Let's look at this. This is SPY, this is SPX, and this is an SPX contract. Okay, you had a good morning, you got $1,000 port, you said, you know what, we're trending here, this SPY, we're holding the 9, we got some support here. You enter somewhere in this candle here. So you look at the SPX contract, SPX trading at 49.65. You buy 49.80. You get this kill candle. Let's pretend this did not fill back up and bounce, okay? Let's pretend you had a stop loss and you're like, you know what, I want to stop somewhere down here. Entries here. Let's say we break down these candles here. If you buy this candle right here, you're buying a $200 contract. This low here, $1.30. You lost 75 bucks in about 10 seconds on that candle. If you had no stop loss and you had a stop loss and you panicked, sold somewhere in here, and then you got really pissed because it bought back up. This is what SPX does. It's great when it pays, but this hurts. This hurts. You get a kill candle like this that doesn't fill, you lose 75 bucks in an instant. This isn't a 5-minute candle that didn't even fill. Like, this is, pardon my French, this is the shit that hurts. And so you guys think you can handle, some of you guys think you can handle the $200 contracts, you get a couple of them. You don't know what to do when you look at your chart and go, I'm down 75 bucks a contract. So again, SPX is fun until it's not. So you know, going back to all these examples, like maybe not the 0DT, but I can sit through a 5-minute candle. If this were to come down, I can sit through that. If this were to sell down, I can sit through this. I have 10 days time on this, you guys. I can sit through all this. SPX, you damn well better ever stop. Like, this is what blows portfolios, is when you enter here, you think you're gonna get this breakout move that doesn't happen, and this is what hurts you guys. And so again, these safer plays, I'm trying to get people on them. I get it. They don't make the big moves all day, every day. You might buy and you might get caught in this. That's fine. You can sell. You can take a loss. You can take it at break even. That's fine. But these are the things that build your portfolio. These are the things that build your buffer. Okay, if you're still, think these are boring, you can play these Monday through Thursday, and then on Friday, have a little risk. Go crazy. Go play SPY 0DT, but don't let reckless playing on a Friday wreck all your gains from Monday through Thursday. That's just stupid trading. Okay. What's the point? I talk about the same thing every month, all the time. I'm trying to get everybody on this. Slower moving is the safer way to go. It's a safer trade. You can get in a trade and your palms are not sweaty. You're not worried about stuff. You can buy time. You can let it play out. You can ride a little bit chop, and you play the chart in front of you instead of the percent gain. You play the chart instead of percent. And another thing, you want to buy at the money or in the money contracts to make it worth it. Does that make sense to everybody? Why I keep talking about that? Again, on these moves that are a little bit smaller, you need to make the move worth it. Because again, this is a big move on the chart. This is only 80 cents here, 80 cents on the stock, versus like on Tesla, 80 cents, is a little move, but yeah, I'm flying through it. We still got 20 something minutes left, 30 minutes left. Does anybody have any questions so far? Any questions on some names? Do we want more examples? How are we feeling so far? Got a few more slides, but like I said, I don't want to end it too early. If I do, we'll definitely chart. But I know there's some people in here, because there's people that DM me all the time that they just cannot get ahead on trading. And so these are the things that kind of do it. And so my favorite chart, my favorite screenshot, most of you guys have seen this, but I'm going to keep posting it. I'm going to keep using it. It is February 20th. I'm going to keep posting this until March 20th, until someone gives me a 30-day update of modest gains, easy, quick little 1 to 2% days on the port, easy, quick little $25, $50 days on their portfolio. I'm going to keep posting this until someone DMs me a screenshot saying, I did it. I followed the plan for 30 days and look at the portfolio. I want to see somebody do it. I know people try, and then they get into one of these trades and they go sideways and they say, this is dumb. I'm just going to play SPY, QQQ, Tesla, NVIDIA. That's fine. But I'm telling you guys from personal experience, from a few DMs that I have got last year, that it works. If you talk to River, he's a very experienced trader. There's a reason he plays AT&T every single week, because of the moves it can make on relatively cheap contracts. And so just want to break this down for you guys, show you how doable it is. There's 252 trading days in a year, 252 trading days. We don't trade on the weekends. This just kind of shows you on $1,000 what $25 a day, 20 days in, $25 a day on $1,000 port, you're up to $1,500. So 30 days from now, how many of you guys with smaller ports would love an extra $500? Help with your mortgage, car payment, whatever it is, student loans, food on the table, drinks at the bar, $500, that's a good night, whatever it is, $50 a day on $1,000 port in a month. You guys have doubled your port, 1,000 to 2,000. 30 days from now, I guarantee a lot of you would say, man, I'd love to have an extra $1,000. The percent per day is a little harder. Again, it starts small. $20 a day, $20, but as the percent of your portfolio. So percent of your portfolio. So if you're at $1,000, 1%, you know, it's going to go up because as your portfolio goes up, that 1% of your portfolio position go up. So this will be harder, but that's where that curve, you know, you see those charts, it's the exponential curve where it starts very small and you're like, I can do this, $10 a day, $10 a day, $10 a day. You get down here, you need $30 days, $40 days. You know, pretty soon you're gonna need $100 days to get that 1%, but that's where you see that vertical curve in your portfolio. But this, if you're these kind of people, the 50, you know, $25 a day, that's the line chart on your port that looks like this. And I'm telling you, at 30 days, 60, 90, you guys are gonna be very happy with the way things look. But again, it's up to you guys. You know, I can only say this to, you know, so much. And, you know, I gave you the examples, I gave you the names to trade, but it's up to you guys. You know, I understand that, you know, what we alert and trade is mostly tech names. But if you can become a good trader, good at charting, and you just stack these every single day, like at the end of the year, you guys are gonna be sitting real pretty, really nice. Yeah, actually I'm doing that. I'm taking 2% a day. That's the way to do it. Another thing I want to stress. So if you're doing that 2% a day, and so we didn't trade yesterday. So today you're up 6, 8% of your port. There's no reason to keep trading. I mean, yes, if there's opportunities, take it. But if your goal is 2% a day, you've quote unquote met your quota, like for 3 days. So ease up on the trading. There's no way you should be up 6, 8, 10% a day. And then when the market closes at the end of the day, you're down 2% of your port. There's no reason for that. And so that's fine. If your goal is 1% or 2%, when you're up big, look at that and say to yourself, okay, I know my goals. I know what I want to do for my family, for myself. Ease up on the trading and scale down. If you're taking 3 contracts, take 1. Keep the stop loss tight, like in the day and in the week green. How difficult was it to adjust to trading the faster moving options as your port grew? I do both. That's a great question. So, I mean, I'm not gonna say my secret because I talk about it all the time, and I have no shame in it. I paper trade every week, and I trade both names every week. So, to start the week, usually on a Monday, I start with those slower movers. You know, the XLEs, the Bank of America, CCL. I start with those on Monday morning. It gives me a buffer. It gives me confidence in my trading. You know, if I hit a couple and they're losers, I say, you know what? Maybe the markets are not doing what I think. I need to take a step back. So I'll take a little breather, take a 30-minute, 1-hour breather. I build that buffer. And then sometimes you'll see me on trade floor, you know, I'm calling out QQQ or SPY or whatever it is. You know, that's when I built the buffer and I have that nice green day. And so I can play with some profits. And so, you know, Monday morning, market open, I'm not trading SPY and QQQ 0DTs. Like I don't like the risk. You know, market is open 6.5 hours a day. 6.5 hours a day to make money. If you're good at trading the open, that's fine, but I'm not. And so there's no reason to trade the first 5-minute candle in a 6.5 hour day. To me, I just don't like the risk. Like I said, the way I reduce my risk, I trade these smaller moving names. If it's something riskier, something I want to test out, I'll paper trade it. And I'm like, okay, I'm gonna play this little bull flag here. I'm like, okay, it's consolidating. I'm plus or minus a few percent. The paper trade, I'm gonna take in the real account now. Like I like where the market is. We've been holding this level for 30 minutes or whatever it is. I'll take on the real account. So throughout my day and throughout the week, I'm constantly finding ways to reduce my risk. And every day I'm mindful of how much I'm up or I'm down. I don't trade for dollar amounts. Like I don't push. Like if I say I want $50 today, I don't push and force a trade to hit that $50 mark, but I'm mindful of it. And same with losses. I know in my mind how much I'm comfortable losing per day, that if I did that several days in a row, I can still come back from that. And so if my loss per day hits, I close up shop. I paper trade or I just close the charts all day. And I just accept that, you know what, markets are choppy or I'm getting stopped out, or there's lots of wicks. I shut it down and I live to fight another day, because when you revenge trade, anybody who's done it, it usually never ends well. You double down your position size because you think, you know what, I took 3 losing trades. This one has to hit. And guess what? Maybe you go super heavy and you double down, you've been losing all day, and you're like, wow, and then this thing stops you out, and then suddenly you're down a lot, and it sucks and it hurts mentally and it hurts your portfolio. um, but to answer your question, time in the market basically. This question was, how difficult was it to adjust fast moving options? Basically, confidence in your trading, confidence in yourself, and levels. If you guys are just blindly taking alerts and not even, charting stuff, you're doing a disservice to yourself. you know like, spend 20, 30 minutes pre-market, chart levels, set alerts for top and bottom. You can see on almost all these examples, like, there's a high and a low alert on every single trade that I take, because I want to know a breakout and breakdown alerts, top and bottom, for if the play's moving for me, this alert goes off. I don't have to sit there and watch this all the time. If this breaks down, this alert goes off and notifies me, hey, the CCL trade is probably going against me. Chart in the pre-market and a few alerts, and that's all you really need. Greed on a contract can be a difference in a green trade and turn red. Yep, I love that. When you call it a day, do you shut everything off, or are you still looking at the market? Good question. If I'm small red on the day, like the first half of the day, so I'm on the West Coast, so market's open at 6:30. If it's 9 a.m. and I'm red, I still have that back half of the day. If I'm small red, I'll kind of sit it out and I'll set alerts, because something tells me, maybe I'm just looking in the wrong places to take trades. I'll most likely keep trading, but if I take a couple bad losses in the day and my mind is not right, and it's a Monday, I usually shut it down, because I don't want to fight. I don't want to start the week deep red and fight back and fight back. It's a relief when you turn green on the week after starting red, but I will usually shut it down. If I, you know, scratch that itch and I play Q's first trade of the day, and maybe I take a losing trade, that's when definitely I look to those slower movers. I set the alerts, but it kind of just depends on my losses and what the market's doing. Like, if I take a couple losses and I clearly see, like, it's, I don't know, FOMC day and markets are chopping, I shut it down. I have no timetable on my goals, where I want to be in a year, 6 months from now. And so, there's stuff I want to achieve, obviously, but I'm not going to force anything. And so, I've been in the market enough, 3 years for me every day, that I just know when the timing is not right. And when it's hitting and the timing is right, you take advantage of that and you hit it. Where is the best place to chart? I don't know your question. Best place. Do you mean time frame? Do you mean time of day? Poppy, you can unmute your mic if you want to answer or ask that in a different way. Yeah, trading view. Anything with pre-market availability. You just turn on the pre-market hours, I guess you could say. Webull has it. TradingView should. Someone help them out. I'm not on TradingView, but they can guide you. Thinkorswim, obviously. Robinhood. Not to be mean, but I don't actually know if Robinhood has charts like candlestick charts. I don't know. Maybe they do. Maybe they don't. How did you learn getting comfortable with the expiration date you choose? Good question, Teresa. For me, if it's a Monday, I'm buying a weekly. So going back to a few charts, I don't really have an example, but if this is a Monday, I'm buying a Friday expiration. I'm not going to buy 60 days expiration, 90 days, because I'm a day trader and I know that day whether I'm right or wrong. And so, yes, this swing could have worked good, or, Starbucks, I don't have a longer time frame to chart to show you, but swings can work all the time. And when they're right, you go, man, why didn't I swing that? But when they're wrong, you're like, wow, I'm really glad I day traded that. But for me, I buy, again, if this is Monday morning, I'm buying 5 days to expiration. So I'm buying that Friday. If it's Thursday, Friday, and it's kind of a sketchy level, like, I'll buy probably next week. Like, this was risky. I had a good week last week. And so, if I had a bad week, I would probably take a less risk next week. And so you can hold through these moves. Say we broke out here and we chopped a little bit here. Again, you have, if this is a Friday, you have technically 6 days to be right. You don't hold through the weekend, but you have some time to be right on that. And so that reduces your risk. Robinhood charts are gross. Yeah. The user interface is what everybody loves. I get it. I've only seen post and training view. Someone might be able to help them. What do you think is best for a beginner? That's a double-edged sword question. So if you ask me, because I am able to be in the market, I day trade and I close 99% of my positions that day because I want to decide when I'm right or, well, I mean, obviously the market is going to tell me based on the chart, but I want to know that day. So if this is today, I want to know today, am I right or wrong on this? I don't want to swing and freak out overnight and pre-market because I got money on the line, whether it's $100 or $300 or $1,000. I don't want to think about it at night because when I first started trading, I did swing trade, and honestly, like it messed with my sleep. Like I would check the charts the minute my alarm went off in the morning. Said, "Oh damn it, Starbucks is down pre-market, and it needs to hold this 93," and I would freak out, and so it would just it messed up my quality of life during the day, and it just was not worth it for me. And so if you have another job that doesn't allow you to be in the market all the day, that's where it's tough. And so that's where, as a quick example, if you took this trade, I'd probably move the stop up a little bit, but you could enter a trade. And what I do is even when I'm in a trade and watching it, I set a stop loss and then I'll set a top side. So if I'm in calls, I will set a stop loss and then a top side profit target. And so mentally, I don't have to look at the chart because I know either I'm right or wrong. My stop will trigger or my alert will go off and I'm right and I take profit. And so the same concept, if you have another job and you cannot be in the market all day, you can do one of two things. You can enter the trade and you can be a bad trader and not set a stop loss and set a bottom alert and a top alert. And if you're in Starbucks calls and say, I'm in this trade right here, I got this meeting, again, I don't recommend this, but you set a bottom side alert that goes off. It tells you when you're wrong. But again, I would set a stop loss. And again, going back to this, I didn't hit on it too hard, but using the options chart. So this line here, it's thin. It's probably hard to see on your phone. This line is this line here right at 93. And coincidentally, it's a 93 level and the stock price is 93, or the options price is 93. So when I'm in a trade, I can look at this and say, I entered at $93. This low a day here, $87. So if I bought at $93, the lowest this contract seen this day was 87, was down in this zone here. And so if I entered this and I say, hey, I got a work meeting, what should my stop loss be if I entered at 93? I would probably do like 85, 87. You can do 87 if you want, 85. And you could say, if this triggers here, I'm wrong. We broke the low of the day, and that is my stop loss. So using an option price chart, I do these lectures about once a month too. So go back and look on some of the other ones or send me a DM and I can send you how to do this. But you use the option price chart to tell you your stop. So, you see it in trade floor a lot. We're going off on a tangent here, but you see it in trade floor a lot. People enter here and say, 20% stop. Well, if you enter at $93, do you even know, like dollar wise, what a 20% stop is? Like, I don't know what it is off the top of my head, but what if 20% is right here? What if a 20% stop is on support and on VWAP? And they come down, they stop you out, and they make this move. You're going to be pretty pissed. And so that's why I do not like percent stops. But if you're in a bind, if you're in a pinch and you got in something and you're in a hurry for whatever reason, you know what? A percent stop is better than nothing. But I 100% of the time, I use an option price chart alongside this to tell me when I'm right or wrong. Hope that answers your question. How much importance do you put pre-market? Pre-market levels are important, especially wicks. I don't have example of like SPY and QQQ are notorious for pre-market wicks. And so if I see a wick like this, Yes, it can be low volume, but these are very important to still mark out. Don't have any quick examples. I may have to pull up Weeble, but wicks pre-market are very important, and I always mark them. And I always leave pre-market levels on, because when we push, we could say we pushed into this here, like we can reject here. Say we pushed, and we can reject here and say, like, you know what? Oh, we broke out. I'm gonna buy calls here. Shoot, why did we reject here? Like this makes no sense. We pushed over here. I always have pre-market on, and I always make note of wicks, especially on the bigger moving names. That's very important to me. Hope I answered your question. Sorry, I'm going back to the questions. Please share my journey. Where did you start? What resources helped you? Great question. I'll try and make it not too long-winded. I started November of 2020. I got it on a Black Friday sale. I got a month membership. I made some good money. I bought a yearly membership. The team was hitting really good. I was making good money, and I don't want to call him out because he's an amazing trader. He called out an alert for calls on Riot. And I said, you know what? Everybody's hitting. They're doing good. And I legit full ported. And 30 to 40 days of my trading journey, I blew my port. And I took Christmas break. I flew home back to the Midwest to see family, and I licked my wounds. And I started over, because I started with 1K. That was my name. I full ported and I blew up, and it was a huge wake up call. And so, kind of after that, I've had struggles in 2021. People have been around, heard me talk about it. I think it was summer of 2021 or 2022. I hit another low point, and that's when River, I think, got bumped up to a support member. And I DM'd him. I said, hey man, I'm taking a break. I'm gonna start DMing you all my plays. And since then, we've been kind of chatting every day. He helps me like every day. Shout out to River, not being cheesy, but that dude has helped me tenfold in my trading. I would chart support and resistance, and early in my trading, I would never chart out trend lines. And I would lose on a trade and say, what the hell happened here? Why did this reject? And he'd be like, dude, trend line. If I was in puts here, I'd be like, why did this bounce? He'd be like, trend line. If I was in calls here, why this reject? He's like, trend line. So he's helped me immensely in my trading career. Trend lines, and just, his motto is just in the day green, even if it's a dollar, in the week green. You can have a red day if it's small, but when you end the week green, when you end the week green, this is where this adds up. You can have a red day. If your goal is $50 a day, you can have a $10 red day. But if you stack a couple $50 winners, that red day on Monday, that $10 loss, that doesn't mean anything because you're ending the week green. So yeah, that was my journey. And initial struggle is definitely, I full ported. I will admit it. I didn't paper trade. But yeah, as I got better and I was better at charting, but again, just charting, going to lectures, like, we mess around, trade floor gets wild. There's a lot of memes, there's a lot of trolling. There's a lot that goes down during the day. Obviously it's wild, but like, education is our number one goal here for anybody new that maybe just joined on this sale. We have education Sunday night through Thursday night. And so if you're not able to attend, every lecture is recorded and posted the next day. So there's no reason to not put a little bit of work in, because if you guys are just waking up, laying in bed, waiting for alerts, like, you will never be good at this. If you actually want to make some income with this and maybe pay off some bills, do some other stuff, have some travel money, it takes a little bit of work. But once you get good at charting and good at levels, like, your confidence will go through the roof, and you're going to say, I can take a little bit around this trade because I trust this chart. Any questions? Let's see. GG unlocks Yeah, I want to know how to set up a stop loss with option prices. Send me a DM. We don't need to be, I mean, you can send friend requests too, but it doesn't need to friend request me first, but send me a DM. So I know, I don't know if that's your username on Discord, but I will give you the link. Otherwise, under recorded lectures, so hashtag recorded lectures, trading with stop losses. Let me see here. Give me 1 second. See if I can pull this up. Give her this chat. Recorded lectures. All right. Make sure what I'm. So, latest classes under recorded lectures. We will just go over it so you can see it because I know it's in here. Waiting, elevator waiting music. I know it's in here. Stop loss and taking profit. January 22nd. This is what you guys want. Anybody watching? To stop loss and taking profit based on the chart level. That's what you want. So again, under the tab, recorded lectures, latest classes, stop losses and taking profit. That is based on, again, the theory of based on what the chart tells you and your option price. Ralph, good to have you. Thanks for tuning in. If anybody does have any questions, if anybody wants homework, we got 4 minutes. I can answer more questions, but I'm gonna leave this up here. Anybody wants homework? Somebody chart out FCX or Starbucks or both. Both of these, let me get a drink of water. Both of these have favorable setups that I like. If you pay attention, you may have some free levels on the chart we went over, but this is just to test your knowledge and to kind of get you guys to look at some different names. But start on the 1 hour, sorry, or the 30-minute chart. Again, wrap it all up, everything we talked about. Chart out some support resistance, maybe some trend lines if you see it. Don't force a level if you don't see it, but find some key levels where you find pivots up and down. And it can be simple, you know, say, hey, if we break this, I might be looking for puts. What do you think? Question mark. Say, hey, if we break over this level, I might be looking at the calls. You know what I mean? And the question, and the reason is I want to challenge people to send some DMs. You know, I don't need 10 DMs a day, not to be rude. I don't have time for that. I can't get to everybody. But if you send me a chart and say, hey, I like this level here on FCX or Bank of America or whatever it is, what do you like here? What do you see? And I'm going to ask you the same question. I'm going to go, okay, nice chart. What do you see, or why do you want to be a bull? Why do you want to be a bear? I'm not just going to say, hey, take the 37 call here and leave it at that and be like, oh, 1K told me to take this. I'm going to test you a little bit, but I wanted to get you guys's, I want to get the wheels turning. I want to get that light bulb inside your head going of charting. It doesn't take much work to chart out levels, set a few alerts and say, hey, what do you think of this position? So if anybody wants homework, chart out these names, or even a couple of those names that we talked about earlier, it can be those I listed. Chart out some levels and say, hey, what do you think if we break here this week or today or tomorrow or tomorrow, whatever it is. That's your homework to test you guys. Uniquely T, first time here. Glad you're here. Thank you. Appreciate it. What is my main watch? Rudy, do you mean time frame? Yes or no? Is that what you mean? Type that in the chat, or you can mute yourself. Cam, what do you what do you trade? The ones over? Yeah, the ones I want over. Oops, one too far. Oh, right here. Yeah. So basically, who was that question? Cam, your question. So basically, literally every day pre-market. Again, market open at 6:30 for me, 6 a.m. I open charts. I kind of chart out some levels. You know, if people are in, you know, the charting tab or on trade floor, I'll kind of say, hey, looking at these levels here. And I basically just go through here. And like I said, I chart a high and a low. So Rivian, I think, is trading at like, well, Starbucks. Let's go over Starbucks. Starbucks is trading at 93. We went over that. We know that. I set an alert for below that. and I set an alert for maybe the pre-market high, and I just wait because I trade on one screen. I have 4 charts. I cannot watch all these plus splat plus spy plus Q. I set alerts, and then when it goes off on my Webull or on my phone, it says Starbucks, has traded under 93. I pull up the chart and go, wow, we're a little bit bearish. We're selling under 93. I pull up the chart and then I pull up the options chain. I kind of watch it. And so that's kind of my, watch list. It takes some a little bit of time, but when you hit that trade, that pre-market, work you put in and the alerts you set, it pays off. Hopefully that answers your question. If you guys got to go, we're at 6, we're at 1 hour. I'm in no hurry, but I'll let it run long. Let's see. How much percent? Viral. So, generally speaking, a full position is 10% of your portfolio. A half is 3 to 5%. Something risky should be about 3%. So, again, there's a reason to me talking about this tonight. Username viral. And so when you have a $500 port, like you can take Tesla. I'm not there to tell you not to do it, but you need to know the risk. If you get a Tesla trade for $210, that's nearly half of your portfolio if you have a $500 portfolio. And so you have to be really realistic. And if you really want to get out of that hole of, man, I can't break over 1,000 or I can't break over $500 or I'm at 1,500, I can't get to 2K. Like, you need to be realistic on the names you trade, because if you take that trade, the Tesla, Nvidia, or whatever it is, AMD, and you take a loss, and the whole 2-step forward, 1 step back, like if that's your portfolios, I'm up 100, I'm down 200, I'm up 75, I'm down 150, I'm up 50, I'm down 60, I'm up 25 down. If you just keep stair stepping down, you need to look at yourself in the mirror and just say, you know what, I'm not ready for those big names. Maybe it's my charting, maybe it's my experience, but you just, I'm telling you guys, these pay. And when they do, you're going to go, damn it, he was right, but I got a couple people on it. I'm trying to get some more people. But yeah, can you share your charts on the names you shared? Yes. So send me a DM on, let me go back. Chart any of these you want, but Starbucks, FCX, Delta Airlines, I think DAL has a favorable setup. But my goal is for you to send me the chart first. I don't want to send a chart and just say, hey, look at this. I want you to send a chart, whether you're really good at charting or really bad. And so I can kind of help some people kind of get the ball rolling on some trading on your own. And so you send me a chart and I'll send you what I'm looking at. But you got to send me something first, because I'm not just going to spoon feed people. I'm kind of the hard parent. I'm the stubborn parent. I'm not going to just spoon feed and hand stuff to people. You got to put some work in. Don't mean to spam me with questions. Do you look at general market conditions? Absolutely. Very good question. Okay. Today we were trending down for most of the day, other than that buy up at the end. And so if market is trending down, I'm not saying that calls can't pay, because like today, Delta Airlines pushed up and it flagged fairly well. I don't want to pull the chart right now, but it pushed up fairly well. And so this had relative strength. They call it relative strength. So SPY and QQQ were kind of trending down. Delta Airlines was relative strength. So that does come into play, but also, if the markets are kind of weak, I will look at sectors. So if SPY is trending down and Qs are trending up, I say, what is pulling SPY down? Because QQQ is big tech only. Apple, AMD, Amazon, Microsoft, Nvidia, Google. That is QQQ. SPY is 500 of the biggest names, which includes those names, plus banks, plus energy. So if SPY is down, QQQs are up, I say, what is pulling SPY down? I will look to these sectors here to find more weakness or find strength. And so hopefully that answers your question. Teresa, good to have you here. DMs are always open. I'm not sure if you're new or just new to class. Again, DMs are always open. Please send them. Cam, appreciate you being here. Appreciate everybody being here. Sonny, great to have you. Great to have you guys. Hopefully I answered all your questions again. Stop losses based on taking profit under beginning lecture. And all the lectures, you guys, look on this recorded lecture tab if you guys ever have questions on stuff. Bob, good to have you. But with that, I'm going to sign off unless anybody has specific questions on this. Like I said, I'm not in a huge hurry, but I kind of want to keep it very on topic. Send me some charts, or if there's charts of other stuff, iPhone, FedEx, FTX, send me a chart. Send me what you're looking at, send me a DM, and I will send you what I like as well or don't like on it. So send me some ideas. But again, guys, we're still early in the year. This should be your motivation. Whatever your port is, if it's double that, double this, but think where you can be at. But again, with that, guys, I'm going to sign off. Have a great night, great week. Again, DMs are always open. Marina, good to have you. Thanks.